How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, just like always, we're going to be breaking down the three major indexes that comprise the United States stock market, as well as going over what I personally did in the stock market today in terms of my trading. And like every single video, we're going to break down a couple of stocks, a couple of ETFs that I'm watching right now in the month of March in 2020 and that I'm personally looking to trade. And like you all can see on my screen now, since the market is live when I'm recording this video, and most of you have probably already seen this, the market yet again is extremely volatile. Yesterday, just like you saw if you guys were paying attention, the markets popped up aggressively, up a historic amount, I believe, for the Dow Jones, and it gave a lot of bulls hope. And now with the Fed cut, emergency cut, which we'll talk about here in a minute or two, the markets are actually pulling down. So a lot to talk about in today's video, guys. So before we do, all I ask from you is to go down below for me and hit that like button, and also consider subscribing to the channel if you want to see further content like this. And I haven't done a like challenge in a while. I did 150 last time. We smashed through that. So let's try and do 175 likes for this video. So go run that like up. Let's the like button, just smash it. Come on, smash that, and consider joining our free Discord group chat and our free Facebook group linked down below in the description box. So as of right now, with about an hour and 3 minutes left in the market, and I do apologize, guys, that I am filming this with about an hour left. Couldn't film it later on, so have to do what I have to do, right? But with an hour left, down about $75 for the S&P, down 2.5%. And let me show you some insane price action from this morning. And people in the Discord chat, me included, we were like, what the heck was that? You can see the S&P opened up at about 30.90. We saw a bit of a decline for the first half hour of the session, and then all of a sudden, look at this green bar, guys. All of a sudden, we went from 30.50 up to around 31.36 in the span of literally a couple of seconds, if not a minute, maybe 2 minutes. And that was, that's one of the craziest moves that I've seen in front of my eyes in a while. I don't know if that's algorithmic trading, whatever it is. I don't know what caused that. Let me know down below in the comments if you guys know. But that ended up being a 2.5% move in the snap of a finger. And then all of a sudden, this, a few minutes later or whatever, around this time period, we got news that the Fed is, cutting these rates, not 25 basis points, but 50 basis points. A nice fat chunk here, and that's an emergency cut. And believe it or not, guys, a lot of people were expecting this. Was I expecting it today? No, but we've been talking about it in previous videos, how this is one thing that the Fed might try and do to alleviate the pressure on the market and the economy here in the short term from the CV. And it seems like, it kind of did the opposite, right? We got that, the Fed cut, then we had Jerome Powell speak at about 11 p.m. Eastern. He was giving a bunch of generic answers and whatever, dodging questions. A lot of the time, big people do this. This is not unknown, right? Not that he was dodging questions, but he wasn't really going too into depth, whatever, right? And ever since then, you can see 11 a.m., once that, he started speaking, the market took a massive dump. S&P down from 3,100 to about 30.30 in the span of that 30 minutes where he was talking. So the whole time he was talking, answering questions, whatever, the market was going down. Then it rebounded a bit, but ultimately ended up going down all the way up to the point where we are at right now. So for me, I was thinking to myself, this emergency rate cut, it could actually be pumping in some fear into investors, right? Because investors, they may be thinking to themselves, why does, the market, obviously a more astute investor, someone, is that the right word, someone that's more, advanced, they know that, when the Fed's cutting interest rates, this is kind of the last ditch effort to boost consumer spending, and we may be coming towards the end of this cycle, right? A lot of people understand that, but for the more beginner investor, they might not understand that at the end of the day, and they might be saying, why is this market falling? Why is this market falling when the rate was just cut? And the truth is, I think it's because people are worrying even more now. We're getting closer and closer to zero rates, and people may be freaking out a little bit because of this. So if we take a look over to the Dow Jones, it was down almost 1,000 points at the low today, down $670 as of right now, down 2.53%. And if we're taking a look at some technicals here very quickly, we got rejected at around 26,700 this morning, which, if you guys recall from my video yesterday, that was a major level of resistance that I was watching. And going back to the S&P, we actually got hit right at around, we didn't get hit. We're actually right under it now at 30.30, this major resistance that we've been talking about as well. So for a bullish close on the S&P, because although, guys, it is getting hit right now, we're still maintaining an uptrend, believe it or not, over the 3 previous trading days. So for a bullish close, I'm thinking anything above 30, 40, 30, 50, that would be a pretty bullish close for the S&P. And obviously, I'm going to be keeping an eye on the futures, as I advise all of you to do, heading into tomorrow's session, so we can get an understanding of where the market can be pushing for tomorrow. So Dow Jones, a bullish close would be probably anything close to, let's say, 26, 300, 200 even. That could be a nice move if it does end up swinging up there, and we'll see over the next couple of minutes what ends up happening. And if we take a look at the NASDAQ today, it's currently down 242 points, 2.73%. And despite that massive pull down today, believe it or not, guys, we're still above, same with the S&P and the Dow, we're still above where we ended up opening yesterday. So overall, we're still green if we're taking a look compared to yesterday's open. And the uptrend, again, like I said a minute ago with the S&P and the Dow, it's intact here on the NASDAQ just based on this 5-day, 5-minute chart. So this is quite interesting. And me personally, like I've been mentioning in these videos, I'm super cash heavy right now due to this volatility. If you're a beginner, this can, like you read in the title, it could be too risky to trade for you. If you're more advanced, you know how to get in and out of positions quickly, you understand volatility and how to profit off of it, this can be a very good opportunity for you, right? And I'd consider myself in that category, and you've been seeing how I've been making money in the ins and outs of this market. But for beginners, what I would like, what I advise most of the time is being careful and looking for, trends and stable trends in the market before either swing trading. It's really a must for swing trading, and especially if you're intraday day trading, right? Look for the trend, and especially in volatility like this, very quick movements in the market, when you're day trading, follow the trend and be very quick and precise with your moves. And if you're wrong, let's say if you're trading TVIX, which is very volatile, let's say you get in, let's say for example right now, I were to get in at, let's say 119, hoping it goes higher, right? Expecting it to go higher, but we take a dump very quickly to 117, cut losses very quickly. That's the goal. When you're wrong, don't lie to yourself, cut losses, and when you're up, in the profit, in the green, like I was earlier, I'll discuss that in about 2-3 minutes here. Lock those profits in very quick and move on to the next trade, and don't force trades. That's very, very important. So that's kind of the overall market update, what moved the markets today. I hope I didn't confuse you guys by what I said about the Fed earlier. I think, honestly, that, again, this interest rate cut was a form of trying to save the market, but at the end of the day, it seems like the market is moving down despite the interest rate cut. And I know it's just one day. We may bounce tomorrow, the next day, or whatever, but it's interesting to see how things work sometimes. And again, I'm cash heavy, and I'm being very, very just conservative here and just looking for quick in and out plays. So hope I didn't confuse you guys again. If I did, let me know in the comments, and I'll be happy to answer any questions. And let me know in the comments while you're at it. Again, what are your thoughts on the markets, individual stocks, the Fed, just in general? What are your thoughts? I would love to know. So now, what did I personally do today? I alluded to it about 2 minutes ago. I traded TVIX. And TVIX, again, it's very volatile. It's very risky. I don't recommend it for beginners, although beginners will trade it, because I was like that too. Let's be honest. Somebody said, don't trade this. It's very volatile, but I kind of wanted to do it because they said that, right? I did it anyway, despite them saying it. And a lot of the time, that's how people learn it. You know, a lot of people learn the hard way. Let's just put it that way. So for me, TVIX today, I got in on this mini little pull down at about $111. I believe it was more towards 111.7. So 111.70 is where I ended up getting in. And at this point in time, I noticed, again, the increased volatility. That's kind of what spikes TVIX here. And I was noticing the markets, I believe it was at this point right here, the S&P in particular, it saw a rally, and I was looking to see if I could short the rally. We started to see some resistance here, and then we started to get some down ticks, and that's where I took the position. That's kind of the gist of it, right? Started to see some resistance, a little bit of a pull down on the S&P, VIX. At that point, you can see clearly it was going up, right? So that was a very good kind of entry point in my eyes for TVIX. And again, it proved to be right, a good entry point. So I got in and out relatively quickly. I got in again at around 111.7, and then I set my limit order. It was funky, guys. I set my limit order at 118, then I quickly dragged it. I drug it down to about, I think, 117.25, and then I ended up filling right here. So overall, this move was about literally like an 8-9 minute move. I made it quick, about 5% profit. And like you've seen in my screenshots before, I'm not playing with a huge dollar amount on TVIX or any of these ETNs, leveraged ETFs that I day trade on a daily basis. I'm focused more on in and out move on an amount of money that I'm willing to day trade and risk in a more speculative trade. And I'm looking to just lock in a quick gain. So today it was around 5% there on TVIX, and that's pretty much all I did for any, new positions, any new moves that I've made. Of course, I'm still holding onto my Microsoft. I was actually up a pretty good amount today, but now with the sell-off, we're back a little bit under where my cost basis is at around 168, 169. I'm simply just holding on to that. And that's it, guys. Let me know down below in the comments, what are your thoughts on the overall markets again and individual trades that you've taken. Now, let's talk about some stocks and actually a quick little CV update here in the United States in terms of casualties. So as of now, seven casualties from the CV. Yesterday, like I reported in this video in the United States, there were 6, and on Sunday, there was 1. So it's very unfortunate, guys. Again, thoughts and prayers to everybody dealing with this, but it's a reality that more and more people are passing from this. And if it gets deeper into the United States, this is obvious. I don't have to say it. You've been hearing it all around. If it gets deeper in the U.S., it can definitely shut down more businesses, hurt the economy, hurt the supply chain even further, and this can thus hurt the stock market. So that in general is kind of what the CV's looking like right now. And fun fact, not that you guys care about this, but my mom actually texted me earlier that And she was in France, by the way. She texted me earlier that she took a flight back here from France yesterday, and they were taking the temperature of everybody getting out of that flight. And if you had a fever, they wouldn't let you in. So that's kind of interesting. I'm sure many of you guys might have already known that. I didn't dive too deep into what precautions airlines are taking right now, but that's kind of interesting to know. And let me know your thoughts in the comments about that. And yeah, just figured I'd throw that in the video. Why not, guys? So let's talk about some stocks now and ETFs that I'm personally watching, starting off with Facebook. And let me tell you guys, Facebook, I mentioned a couple weeks ago before this whole drop in the markets, I mentioned how Facebook, anything under 200 to me was quite attractive. Anything under 190 was getting a bit more attractive. And now that we're in the 180s, we got all the way down to low 180s a couple days ago. I'm thinking Facebook is getting to a point where it could be a longer term buy, a decent value. It's not a screaming bargain like it was back in 2018 when it was $120. That was a bargain, screaming bargain in my opinion. But I feel like it's a little bit above that. If it were to fall somehow into the 170s, 160s, I would for sure load the boat on Facebook when it comes to a longer term investment. So in the meantime, I'm just looking to see what it does. On the 5-day, 5-minute, it's falling a bit below supports from yesterday at about 190, and I think it's bearish in general if it closes below 190. So for me, if that happens, maybe there's a risk for Facebook to fall into the low 180s. And for now, that's kind of how I'm playing it. So I'm not allocating any capital quite yet. But again, if we get down to those lower levels, 180, I might scoop up some shares for a longer term swing trade, guys. So two stocks that are safer plays, dividend plays, quote unquote value plays that haven't been hit too hard today since the last time I've checked them. One is KO, ticker symbol KO, also known as Coca-Cola. This one's up 62 cents right now, up 1.09%. And you guys can see this massive cliff dive Coca-Cola took over these past about 10 days, calendar days here. And we're recovering ever since that bottom at about $53. So for sure, Coca-Cola, although not all stocks are going to fall, or rather, let me reword that. Coca-Cola, it could rise, but, don't think that if it rises one day when the markets are red, it's going to do that every single day, right? It's still prone to going down, even when the markets are down in general, despite it being up today. But I figured it's worth watching for sure. Ticker symbol KO. Another one is MO. Ticker symbol MO is Altria. This one is up 1% nearly today, up 37 cents. And in general, guys, this is one that I would trade personally if we were to break this 50 SMA. I've seen it do this before, get extremely oversold and then it rallies, kind of like what it did a couple months ago. Got very oversold. We ended up bottoming out. We broke out of the 50 SMA, which was that breakout kind of catalyst from technically speaking here that I was looking for. And then from there, we rallied. So at this point, we got very oversold. We hit a lower low at $38 in terms of the overall trend here, and if it pops, I'm thinking this could be a nice short-term move, maybe up to, let's say, $40, $45, maybe $46. So would you look at the market now? We started, the S&P was down about 70. Now we're down about 58. Microsoft is pushing back into the 167s, guys. This is looking quite good. And again, if we pop here, especially on Microsoft, up anywhere towards the 170s, that would be a very bullish bullish close in my opinion. Another stock, tech stock here, is going to be Google, ticker symbol GOOG. We saw some weakness today as we did across the market. This was down $37 today, down 2.72%. Seems like the trend is holding. So tomorrow, let's say we have a green day miraculously. Let's say this market swings back up like it has been up and down these past couple of days. I could see Google doing very well, maybe filling the gap up to, let's say, $1,400 per share. So Beyond Meat, BYND, this one was green, I believe, earlier when I was looking at it. Now it's still green, but kind of more on the break-even side at about 0.39% in the green. But ever since a couple days ago, this stock has gone from, get this, 120 all the way down to about $85 due to a poor earnings report, I'm assuming. We didn't talk about that, and I didn't prep any notes for it in this video, so I have to make a note for that for the next couple of videos. But either way, they reported earnings. Now they seem to be rebounding, and like many of the stocks, holding this little uptrend. So let's see what this does heading into the session tomorrow. So some of the most beaten down stocks have been the airline stocks. So we haven't talked about them in a couple days. Let's just glance at some of the most popular ones to see what has been going on. So LUV, Southwest Airlines, this stock down about 2% today, but in general, ever since this CV scare, really since this market drop over the past week, 2 weeks, this stock's gone from $58 down to $44. That's a drop of, guys, get this, 20%. And that's not the worst performing one. We see American Airlines here go from $31, this is insane, down to $17, which is a drop of about 40% in the stock. So what do you all think about some of these airlines? Do you see some value emerging here? You know, Delta is one that I believe Warren Buffett bought a couple days ago, more shares of Delta. You know, Delta's down from, what is it, like $60 down to about $46, which is a 25% almost drop there. And their dividends about 3.5% since the last time I checked. So are you seeing some value emerging here in airlines? I would love to know, because I'm not going to act like I'm an expert on airlines. I'm not, really. I don't know a lot about these stocks. I'd love to know in general, though, what you guys have to think, and maybe we can make a video and dive deeper into it. So crude oil on the ETF side here, I'm looking at DRIP, D-R-I-P, and in general, crude oil is what I like to look at before looking at DRIP. And crude oil here has been in a heavy downtrend ever since the beginning of 2020. We saw a pretty nice spike here from $43 up to about $48. But now on the 6-month chart, it seems like we are struggling under that 50 SMA, which could be an opportunity for us to short this rally. So let's talk about DRIP a little bit. DRIP is an inverse ETF that you guys can see is up 7.39% today. This is one that trades based upon XOP, right? And XOP is, you guys can read it up here, is an S&P oil and gas ETF. And what this ETF tracks is SPS IOP, I believe. That's what it is, right? SPS IOP, which in theory, DRIP tracks this as well, since DRIP tracks XOP, which tracks SPS IOP, which I hope that makes sense to you guys, didn't confuse you there. But either way, DRIP follows both of these, or not, it does not follow both of these. DRIP goes up rather when XOP and SPS IOP are going down. So I hope I didn't confuse you there, but DRIP, again, going up whenever XOP is going down. So XOP here, especially if we get that plunge in crude oil, I'm thinking we could see a nice downward move here, maybe 14 bucks, even a lower low, which offers a lot of potential here in drip. And you can see it was literally at 230 bucks a couple days ago. Now we're forming a cup pattern. Let's see if we can complete that and maybe even break out above 230. That's kind of the move that I'm looking at here for drip. And I believe it's down from 200 just a couple hours ago. So you can see that this could be a dip opportunity even right now. So there we go, guys. That's pretty much everything that I wanted to talk about in today's video. I mean, a bunch of other stocks we can go over. Tesla, this was up about 2%, or it's up about 1.5% right now. It made a pretty nice move earlier in the day up to the 800s, believe it or not, because they got upgraded to $1,000 by some other firm, I believe. Uber today down, or it was down now. Whoa, look at that pop in Uber. Look at that, from 32 up to about 33.50. It's currently up about 2% on the day almost. And I was getting questions about Uber. I feel like this company is a little bit more prone to the ups and downs of the CV, especially if it were to get spread here in the United States more aggressively, because think about it, guys. An Uber, at the end of the day, it's kind of like a public vehicle. Sure, the guy owns it, the gal owns it, whoever's driving the Uber, whatever, but multiple people, lots of people, especially if the driver is active, they're getting in every single day. And with the CV scares, especially again if it spreads, less and less people are going to want to use Uber. But then on the flip side, more people might want to use Uber Eats, which is a delivery service for food that Uber provides, and that could be a good thing at the end of the day for that side of the business, although it's not as big as the driving business, but whatever. You guys get the point, right? So that's kind of what Uber did today, and in general, guys, that is it. We can go all day. Some other ones are, NVIDIA, Square, MA, which is MasterCard. We can go all day, guys, but I have to cut the video off right here. So if you guys enjoyed the video, go down below for me and hit that like button. Consider subscribing, and don't forget, let's get this video to 175 likes. That is the goal for this video. Let's smash through that. Heck, let's get 200 likes. Let's just try to get it. All right, I'll catch you all in the next video. Oh, and don't forget, 2 free stocks from Webull. I know Robinhood has been messing up, guys. You might as well just go on to Webull, get your 2 free stocks with a deposit of $100, and they're valued at $1,400, and that is linked down below in the description box. So I'll catch you all in the next video. Thanks for all the support. As always, peace out.